Travis Kelce just did something that actually makes sense. He turned a childhood obsession into an investor move. Today, he joined an activist investor group led by JANA Partners that disclosed roughly a 9% stake in Six Flags, and the market noticed. Shares popped sharply after the announcement. Reuters. This isn't a celebrity flex. JANA isn't a hobby club. It's a well-known activist investor that pushes for real operational fixes, board changes, and marketing overhauls at consumer-facing companies. Kelce's name gives the campaign something JANA rarely buys: instant consumer attention and an authentic storytelling angle. He's not being handed a ceremonial seat. He's being attached to a plan that is explicitly about spurring improvements to parks, guest experience, and shareholder value. AP News, why that matters. Six Flags has been under pressure. Attendance and margins have been hit by weather and softer consumer spending, and the company's stock has been volatile since its merger with Cedar Fair last year. An activist group taking a meaningful stake means someone thinks there's upside if the company fixes basics. Better marketing, smarter capital allocation, clearer seasonal programming, and yes, the kind of fan-facing stuff that actually gets people in the gates. Kelce adds credibility on that consumer side. He's literally the guy who talks about roller coaster culture for a living. AP News, listen. Activist campaigns can be messy. They can also work. JANA's track record includes pushing for measurable change at public companies. The typical playbook is to start a constructive dialogue with management, outline specific operational ideas, and, if needed, push for board-level changes. That's the road ahead here. JANA's Scott Ostfeld flagged the intent to engage the Six Flags board and management about improving the guest experience and tightening operations. Kelce's role is more than photo op. He's a public-facing asset who can help drive demand if the parks actually fix what's frayed. Reuters, think about the levers. What actually moves theme park economics? Attendance, per capita spend, and season pass retention. Those are driven by marketing, pricing, ride lineup, reliability, food and beverage quality, staff training, event programming, and straightforward operations like entry speed and queue management. Activists push on the mix of short-term fixes, better promotions, targeted pricing, and long-term capital choices, which rides to refurbish, which assets to invest in. A celebrity partner like Kelce can accelerate the short-term demand side. Promotional weekends, co-branded events, and storytelling that turns a casual summer trip into a must-do. Barron's Kelce's personal angle is the heavy lift for public perception. He's spoken about Cedar Point and Six Flags as personal touchstones, family road trips, the thrill of coasters, the nostalgia. That authenticity buys him two things: trust from consumers and pressure on management. If Kelce says fix this for families, that's a consumer message with teeth. If customers show up for Kelce-themed promotions, it validates the activist thesis that improvement can move the top line. JANA already brought in experienced operators and executives. The group reportedly includes consumer and tech executives like Glenn Murphy and Dave Habiger. So the plan is to marry operational chops with consumer storytelling. AP News market reaction was immediate and unsurprising. Investors rallied. Stocks surged on the logic that activist involvement increases the odds of a turnaround, or at least forces a clear, saleable plan. But markets can be fickle. The initial pop reflects optimism about change, not proof that change will happen. Activist turnarounds take time, and theme parks face outside variables: weather, regional tourism trends, staffing markets that no amount of PR will fix overnight. Reuters, here's the practical timeline to watch over the next 90 days. Will JANA and the investor group engage privately with Six Flags board or go public immediately? Will they push for specific directors or management changes? Will they roll out consumer-facing pilots, weekend lineups, special events, partnership promos that validate demand? The first moves will signal whether this is a gentler, constructive push or a more aggressive board-level campaign. Reuters' risks are real. Celebrity involvement doesn't replace operational competence. If the company resists civil engagement, this could become an ugly proxy fight that wastes time and capital. And even with cooperation, improving parks requires investment. Ride maintenance, staffing, safety, and the occasional marquee attraction are expensive and slow. Activist investors sometimes clash with the reality that leisure businesses need patient capital and steady execution to rebuild trust and attendance. AP News, but there's a unique upside here. Kelce brings not just eyeballs, but a brand that translates to family weekends and viral moments. Imagine a Kelce curated weekend at Cedar Point or Six Flags, sold like an event. Limited tickets, branded experiences, and social media momentum. That's short term revenue that can be measured. More importantly, it's the kind of proof of concept activists need to show boards and investors. Change the product, drive the crowds, prove the thesis. If Kelce helps create a replicable spike, JANA's argument for broader operational investment becomes easier to make. Barron's for Six Flags executives, the smart move is simple but hard. Lean in. Accept the engagement, show clear short-term plans that move attendance and guest satisfaction metrics, and be transparent about capital allocation. For local park managers, focus on the basics that guests remember. Cleaner grounds, faster lines, reliable ride operations, and staff who feel empowered. Fix the small things that make families smile. Better food options, clearer signage, shorter entry waits, and the brand story heals faster than a new coaster ever could. AP News for Kelce? This is a savvy brand extension. He's moved beyond endorsement into ownership-adjacent action. That's how modern athletes convert audiences into influence, not just with ads, but with stakeholder moves that can deliver measurable outcomes. If he helps make Cedar Point and Six Flags better for the next generation, he gets the emotional ROI. If the park's revenue improves, shareholders get the financial ROI. JANA gets the operational pushes it wants. And Kelce gets the hometown credibility he clearly values. Reuters' quick takeaway: expect a noisy few weeks. Activist strategies are loud by design. They force issues into the open to accelerate decisions. Track boardroom responses any consumer pilots Kelce might promote, and early attendance signals from pilot parks. If executed well, this could be a textbook case where celebrity plus activist plus operator experience produce measurable change. If bungled, it could be another reminder that turning around leisure brands is a long, bumpy ride. Reuters' final thought: this story works because it's human. It's not a hedge fund buying a company for spreadsheets. It's a hometown hero backing a brand he loved as a kid and saying, "Let's fix this for families." That message matters in a business where emotion and memory are the product. Whether the outcome is a killer co-branded weekend or a full corporate reorg, this is one of those moments where culture, commerce, and fandom intersect. And that's why people will be watching closely. AP News. You know those moments when something feels inevitable and then it still manages to surprise you? Travis Kelce buying into Six Flags Cedar Point included lands exactly there. It's one of those perfect life circle headlines. A guy who spent his childhood screaming on roller coasters, who became NFL royalty, now getting to own a piece of the playground he loved. If you're a fan, it's the kind of news that makes you grin and go, of course. Of course he'd do that. Let's be blunt. This isn't just a celebrity flex. For Kelce, it's personal. He and his brother Jason have spent years talking about theme park lore on podcasts and playlists, trading stories about the first time a loop made them gag, or the exact spot on a wooden coaster where their stomachs fell out. Those are the memories that build a person. Now Travis gets to help preserve them for everyone else. That's why the announcement lands as more than a business move. It's sentimental stewardship. There's another angle that makes this actually smart, not just sweet. Athletes buy jerseys and cars and islands. Investing in an entertainment brand ties your personal brand to endless, repeatable experiences. Families, first dates, birthday trips, generations. Those are recurring memories, not one-off headlines. Plus, parks are cash machines in ways Hollywood isn't: admission, food, merchandising, events. If Kelce plays this right, he's not just buying nostalgia, he's buying a durable revenue engine that pairs perfectly with his public persona. Loud, fun, family-friendly, just a little bit wild. And Cedar Point? Iconic. If you grew up in Ohio or the Midwest, Cedar Point is shorthand for summers, cotton candy, and the kind of dare-you-to-ride courage that feels like growing up. Kelce openly loving that place on Instagram isn't performative. It reads like genuine gratitude. That authenticity matters. Fans don't react to deals, they react to why someone made the deal. Travis made this because it mattered to him as a kid, which makes the headline land with warmth rather than cynicism. There's also the cultural play. Kelce is a magnet: media, podcasts, a loyal fan base who follows him everywhere. Imagine seasonal events branded with his name, charity days where kids from underserved neighborhoods ride for free, podcast tapings inside the park, or halftime style fan competitions. He's not just an investor, he's a living, breathing promotional engine who can turn a ride into a moment. That kind of symbiosis between celebrity and place is rare and potent. Let's not ignore the timing. Kelce's playing career is winding down. He's still elite, but the arc of an NFL life pushes guys toward the next chapter: media, ownership, philanthropy. Buying into a major brand now is smart transition planning. It signals he isn't waiting until retirement to build legacy. He's starting to own it now. That's a lesson a lot of athletes learn too late. Build the next act while your profile is still sky high. Travis is doing that with style. There's one bit of delicious irony here, too. The loving viral clips of Travis and Jason shrieking on coasters now double as content for a business he partly controls. That loop, memory feeding future memory,